Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Today, we will talk about the top 5 stocks that BlackRock is acquiring to prepare for the upcoming market collapse. We'll explore how you can harness these choices to potentially secure profitable returns. Let's begin. In 2023, the United States will boast a staggering annual GDP of $23.3 trillion, while BlackRock, as the world's largest asset manager, will command an astounding $9.42 trillion in assets. What sets BlackRock apart isn't just its immense size, but its remarkable ability to influence not just individuals but entire nations, powered by its technological marvel, Aladdin. This proprietary software system serves as the unseen force driving BlackRock's operations, allowing it to navigate markets with unmatched precision. Here are the top 5 stocks BlackRock is buying to survive the upcoming market collapse. The first stock on the list is Palo Alto Networks, and BlackRock's interest in it is intriguing. Palo Alto Networks exhibits solid resilience, thriving even in uncertain economic times, thanks to its strategic expansion with Cortex and smart market approach. Its prowess in managing cash flow through deferred payment plans has impressed BlackRock, and the stock has seen impressive year-to-date growth, surging nearly 69%, outperforming the S&P 500 and cybersecurity peers. Palo Alto Networks' go-to-market strategy and its valuation, though not cheap, trading at 8.1 times EV to C 2024 sales, make it a worthwhile investment, according to BlackRock. Wall Street aligns with this sentiment, with a current share price of $236 and a median sell-side price target of $275, implying a potential 15 to 16% upside. Keep an eye on Palo Alto Networks. It might just be your ticket to surviving and thriving in the upcoming market turbulence. Shifting our attention to the second stock on BlackRock's radar, we find Conoco Phillips, an esteemed oil and gas behemoth with roots dating back to the Civil War era. BlackRock's interest in Conoco Phillips is well-founded, supported by compelling factors. Notably, the company's focus on the lucrative oil-rich region of Delaware Basin sets it apart, as it holds approximately 650,000 net acres in this valuable basin. While some debt is part of the equation, which is common to the oil and gas industry, Conoco Phillips effectively manages its leverage. Whether Conoco Phillips aligns with your wealth-building goals depends on your investment horizon. For those closer to retirement and seeking wealth preservation, it presents an excellent choice. In essence, Conoco Phillips represents a promising investment opportunity, offering diversified exposure to the oil sector, particularly the Delaware Basin, supported by its extensive historical track record, making it a dependable long-term option. That's a lowdown on Conoco Phillips, the second stock on BlackRock's watch list. Before we continue, remember to show your support by giving this video a big thumbs up, subscribing to our channel, and ringing that notification bell to stay updated with our latest content. In our analysis of the third stock today, let's dive into Broadcom, a company with an intriguing story. Some investors may have misconstrued Broadcom's long-term strategy, leading to disappointment, notably in light of the absence of an AI boost in their recent Q3 results. However, there's more to this than meets the eye. Despite moderate revenue growth, Broadcom consistently generates robust free cash flow, with increasing free cash flow per share thanks to share buybacks. When it comes to valuation, Broadcom's trading aligns with the S&P 500 on both trailing 12 months and forward price-to-earnings basis. Yet, its free cash flow margins stand at roughly 3 times higher, hinting at potential undervaluation. Despite the Q3 setback, Broadcom's free cash flow continues to rise, further propelled by the pending VMware acquisition. In conclusion, Broadcom presents a clear strategy, a track record of successful acquisitions, and a dedication to delivering value to shareholders, rendering it an attractive choice for those seeking growth prospects and a dependable dividend. That's the latest on Broadcom. Now let's delve into BlackRock's interest in Tesla, our fourth stock of focus, driven by a blend of technical indicators and market dynamics. While there are signals suggesting potential selling, a glimmer of optimism emerges from historical seasonality, with October and November historically proving strong months for this electric powerhouse. Tesla did experience a pullback from July to August, but found robust support at $212, initiating a notable recovery since then. Momentum indicators offer promise, though there are challenges ahead. Beyond the charts, Tesla maintains a robust market share in the EV industry, thanks to its scale and early adoption advantages. Nevertheless, with a forward price-to-earnings ratio of 65, it's not a bargain, and as Tesla expands, its multiples may taper. Keep these factors in consideration when evaluating Tesla as an investment. As the final stock on our list, BlackRock is strategically investing in 5 stocks to prepare for a potential market downturn, while aiming for significant gains. Among these, Apple stands out due to its distinctive pricing strategy. Unlike previous years, when iPhone releases led to price drops, Apple is now strategically pricing its new models, especially the high-end ones. Analysts anticipate an impressive 20% surge in Apple's stock price, driven by advancements in chip, battery, and photo technology in the iPhone Pro models. Encouraging customers to upgrade to these premium versions, along with carrier discounts and subscription programs, makes this strategy promising for a 20% stock price boost. BlackRock closely monitors Apple's pricing strategy to secure its dominance in the tech industry. Consider these stocks for a robust portfolio. In conclusion, BlackRock's strategic investments in these top 5 stocks offer a compelling opportunity to navigate and potentially thrive in the face of an impending market collapse. With the potential for significant growth, these picks reflect BlackRock's prudent approach to safeguarding portfolios and maximizing returns. Well, that's it for now. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.